Well, hello guys. Sorry about last week, but Mother's Day was coming up and Jenny, Victoria is bloody freezing. Jane, it's really, really cold. Almost as cold as a Scotsman hut. Only teasing aid. Nah, winter's coming on pretty quick. So, and to all our mums out there, happy Mother's Day for last week. I ended up spending Friday night with Jenny and the kids and the whole weekend, so no, you'd be freezing. You guys would be colder. The only thing between you and Antarctica is an occasional stray whale that's come up to get some sunshine. Guys, I got a couple of emails and whatnot with people wanting me to go through scalping. So I was just going to flash up my charts and have a brief chat about scalping, and then open up the mic to anyone else that wants to have a chat or say anything, and by all means put their 2 bobs worth in as well, which would be great. As you know, I like to scalp. There are a number of things that go into it, and I was very, very lucky when White Cow was there to be able to badger poor Todd and get under his skin and see how he did things, and a few others, which was really a real godsend, and talking to people like Aid with his 513 cross and the ATR trailing stop. So first and foremost, what is scalping? We all know it is. It's a way of using our leverage to jump into a market, make a few pips, 2, 3, 5, 10, depending on who you read, and jump out as quickly as possible. So we're not ranging, we're not following a daily move or whatnot. We're basically jumping in, and the best analogy I use for people is it's like surfing. What scalping is to me is figuring out which way the current's going, lining yourself up with a wave and surfing that wave in line with the current. And the idea isn't to try to surf the wave from one side of Australia to the other. It's to jump on, have a swim, have a bit of a surf, and then jump back off again. And that's how I treat my scalping. We all know the market ebbs and flows. It moves backwards and forwards. What we're trying to do as scalpers is to jump on, grab a few pips, and then jump out so we're not exposed. So on the one hand, I enjoy scalping because I'm not always in the market. Irrespective of what news happens, my account's fundamentally protected. There are a couple of things though with scalping. It's not as simple as it sometimes seems with people. So there's a couple of real risk factors to consider. Is that, for example, the biggest problem you've got is with scalping, because you're jumping on and you're allowing the position to run to grab a good few pips, you're already behind the 8 ball when it comes to your risk reward. So the example I normally give people is, assuming we're going to trade the pound dollar here, and assuming that I'm set to take 10 pips of profit. So let's draw it up. We want to get out with plus 10 pips. There we go. So that's what we're aiming for. And, most scalpers will use a 10 pip risk, which should give us a risk to reward of 1 to 1. That's what we assume. The problem is we've got to take into account our spread. And on the pound, the spread currently with my broker, it just flashed up 2 pips. So before I enter the trade, my risk, I'm already minus 2 pips down. So what that means is that I'm starting off at minus 2. My target is 10 pips that way. Okay. However, I'm already minus 2, so I'm already behind the 8 ball. So what that means is that when I get stopped out at my 10 pips risk that I've got, I'm actually getting stopped out at minus 12. with my spread. And what that does, it stuffs up my risk to reward. It's actually worse than 1-to-1. In this case, it turns out to be, what is it, 0 point, you'll have to excuse my maths, it's just off my head, to 1, or something along those lines. One way to get around this sort of thing is to either aim for a bigger target or try to get a broker that has a lower pip spread. And there's some decent brokers out there that do it, but you have to be careful with some dealing desk brokers. Some dealing desk brokers won't allow you to scalp. Because they're taking the opposite side and you're creating work for them, they can get a little bit antsy and actually just tell you they won't do it. A lot of the ECN brokers, not an issue. It's usually pretty decent. So it's not too bad. So, but that's one of the cons. The beauty about the Forex market is that we can take a one-lot trade, scalp for say 5 pips, have that trade done in 5 minutes and make 50 bucks. And you know, $50 every 5 minutes is actually a pretty good income, because over 10, 20 or 30 scalps, you're looking at $500, $1,000, $1,500 a day. You know, if you're that way inclined. So scalping, even though it doesn't sound like much, can be really, really profitable if it's done properly and consistently. Now, back in the old days, I used to scalp like mad, and the problem with spending time scalping is that it does take a lot of concentration. It can be simple, but you've got to sit there and take your chances, and when an opportunity presents itself, if you don't grab it there and then, you've lost the scalp, because for every pip price moves against you, you're already behind the 8 ball. So do be aware of that. Scalping is pretty labour intensive as opposed to say a longer term swing trade or the swing failure trades or anything else. So there's a few little bits and pieces. So when it comes to my scalping, I usually go through my pre-trade routine. I'll open up my 4-hour charts, my 1-hour charts and 15-minute charts, figure out what levels I'm in, similar to my swing failures that we discussed previously, and determine, you know, get a feel for which way the market's going. And they're the directions that I really want to scalp. Having determined those levels, I will then open up my renko charts and bring them up to date and draw up any support or resistance lines. So if we pull up here, we've got the EU. I'll turn that auto scroll feature off and we'll go back right to the beginning. So we've caught up our 4 hours, our 15 minutes and our 1-hour charts and determined our levels. The next thing I want to start doing is getting a feel for the renko and how the market's moving. Now because we're scalping and we're going in for only a few small positions, you can scalp at any time of the day. We're only going for a few pips here and there. But with the renkos, it can get very stagnant. So I limit my scalping to the London session, the first couple of hours of London, and the first couple of hours of the US with the New York reversal. Because I want that volatility, I enjoy that volatility, it makes my scalps go to target a lot quicker, and you know, I can meet my profit targets a lot easier that way as well. So do be aware of that. Even though the Forex market does run 24/7, and trust me, I've stayed up, you know, I think I stayed up 24 hours or 25 hours straight once and scalped the whole day. Made a bucket load of pips, but for the amount of effort, the rewards were a little bit difficult, and it's exhausting. Even though you can do it 24/7, why take and waste all your energy when you can focus on a couple of hours a day, make your money and get out and actually have a life? So do be aware of that form. So that's the basic consideration. So when we go into our scalping technique, once I've determined my levels, I then start looking for a setup. Now there's 1,000,001 different ways to scalp, and what I'll flash on the screen is a page. I'm not quite sure if you guys can see that. There we go. This has got 21 different Forex scalping systems. Now I've been through and I've had a look at some and I've adapted others, and you know, there's 1,000,001 ways you can scalp. Go onto FX Fisherman or Forex Factory or you know, any one of those places, and you can get 1,000,001 systems. The thing is, you've got to get a scalping strategy that makes sense to you. You've got to have your definite stops, your definite profit targets, and what you're trying to achieve. and know your system inside out. I can sit here and show you guys how I do things, but because I interpret the market a certain way, and because I have a different perspective or a different bit of experience, what scalping wise suits me may not suit Phil or Rita or someone else. So do be aware of that. You can always find a system, but you've got to make it your own. And what I've done is, like I told you, is I'd go back and I used to do a fair bit of back testing. Now it's a little bit harder with the renkos, although Brent's got a really good renko EA that lets you do that. My strategy is fairly simple. What I'm looking for is basically a break out of a moving average. So if we start with my template here, I've got the box indicators. Hold on. You'll see I've got these box indicators. There's another big one there. And what they show me is the Asia session and the US session. So, and I'm looking to scalp in this period and in this period. The other periods, I sleep. And that's what I'm basically looking for. Now, long-term, scalping isn't my only method of trading. I also like trading swing failures. So if I see a swing failure and I go a certain direction, I will also scalp concurrently with that as well within my risk tolerance, which we'll discuss later. So I've got my Asia box and my New York box. The next two things is I've got two moving averages. It's a 5-period smooth moving average applied to the open, and then a 5-period, applied to the high, my fault. So a 5-period smooth moving average applied to the high, and the second one is a 5-period smooth moving average applied to the low. And what that does is it gives me a nice little channel. And this channel is my reset. This is where I expect price to follow. And what I'm looking for is a break out of that channel. Now, the candles, if they're moving or if price is moving faster than this 5-period smoothing average, I want to jump onto that, grab a few pips, and then jump off it again. Now, I will only trade with my other indicator, which is my MACD, which is down here. My MACD has a setting of 5, 20, 25, which is slightly different to your standard MACD setting. And I'll call that up here so you guys can see it. 5, 20, 25. My fastest 5, my slowest 20, and my signal is 25. What this is giving me is two different indicators on my MACD. The way I use it is, first we've got MACD line. It's set at a period of 25, and what this gives me is the momentum of the market. So if it's below the zero line, like we have from here to here, we're in a bearish trend. If it's above the zero line, it's bullish. Bearish, bullish. So I call this my direction. So the big thick yellow line gives me direction. I have to excuse my writing chat because Joanne, yes, it is recorded. It's getting recorded by, sorry I didn't see you there. It's getting recorded by the actual program, any meeting itself. And then it's also being recorded on my Mac as well. So sorry about that. So the yellow line gives us direction. My green-red line, which you'll see, gives me momentum. So if it's green or above, we're bullish. If it's red and below, we're bearish. And that gives me a feel of the market. And the strategy that I use is very simple. And scalping, because you don't get much time to think about it, has to be simple. What I'm looking for is a break of a colored candle outside of the channel in conjunction with the momentum. Now, if it's the direction, yellow here, if it's primarily bearish, I'm cautious going counter trend, and I'm more aggressive if I'm going with the trend, if it's below zero, like we are. Oops, this is probably a better example. There. Dennis, I've got an indicator. It's a simple moving average, and anyone can have it. And it's, and I'll grab it for you if you like, Dennis. That's not a problem at all. So, and what it is just a, like I said, a simple moving average that changes color if direction is up, or if it's down, or if it's horizontal, it's yellow. And it's this moving average indicator. So I'll actually compile all these indicators and put them together for everyone, and you can definitely have them. So, whoops, daisy. So when I'm actually trading this, I'm looking for a break, and we'll make this a big bright blue. Is I'm looking for a break of a candle out of the channel in direction with my MACD momentum. If I get that, I'll jump on for a scalp. My stop loss is below the channel, and it's usually about 15 to 20 pips. My target is to ride it, and there's a couple of ways you can do it. What I do is I take 60% at +5. Hi JJ. 60% at +5, and then I move my position, my stop loss, to break even, which is just behind it. Now, more often than not, that'll stop me out. Occasionally, if I've got my direction with my swing failure stuff, or the market maker, or Steve Morrow, I may not move the break even straight away. But that's how primarily I scalp. My second target is to hold it as long as the candles stay above the channel. So the 40% position I will maintain as long as we're above the channel. If I get a close back into the channel, above, no, it's really hard to write with a mouse. I think that's channel, or Chanel will be one of them. So I'm actually trying to hold that for as long as I can. Now, it doesn't always work, and you do get stops with scalping. It is, Dennis, it's a 5-brick renko, so my scalping's on a 5-brick. And that, guys, is my scalping strategy in a nutshell. So if I erase that, and if we go through and start putting some trades up, that would be one trade. I would have gotten my 5 pips, gone to break even, didn't get stopped there, kept going, would have been stopped out through there. So would have got 60% of my initial unit of risk. Here we wouldn't have traded because the MACD is green. Here we wouldn't have traded because the MACD is still green. Here we wouldn't have. This would be my next entry right there. And what we've got here is, oops, we've got a green candle breaking out of the channel. We've got a green MACD in line with our dad and mum indicator, what I call my direction and momentum indicator. And I'm working it to get my 5 pips. So would have gotten my 5 and break even, would have gone up another 5, would have hit 15, and then possibly come back. Now I usually don't let it run much more than 10 to 15, and then I usually take profits. So that was a nice scalp. The next scalp will be in this one. Oi. So it's come back into the channel, come back out of it, and I would have entered, although I'd be a lot more cautious with that. Just a note of warning, guys, which is in my rules, I don't take more than 3 scalps out of the one move. So see how we've had a, excuse me, see how we've had a move through here? Okay, I wouldn't scalp that more than 3 times, because what tends to happen is that as price moves, we're starting to lose more and more momentum. And you can start to see that in the MACD. We've actually formed a head and shoulders pattern. So when it gets to this position, where it starts to break out again, even though it's green, you know, the momentum's starting to change, and that's a risky position. So this one here, personally, oops, I wouldn't take. I'd stay out of that. And that's just me personally. So having done that, the market's starting to chop now. We're getting into the US, would have gone up, and we're now approaching. So that hasn't quite crossed over. That there is a trade. So we now start going short. And we'd hold that one, and we've gotten 5 pips, 10 pips, 15 pips possibly. So I trade the first couple hours of the US session. So first few hours of London, if I can get here, which I can't always get to, you know, if I'm up and whatnot, and I don't go to bed till 1, 2 in the morning most nights, and if I'm up, I will scalp. It is much better when there's volatility. Where you have to be careful is when they go to lunch. When the US traders go to lunch, we get that dead patch, and that can be, you know, just dead, especially with the renkos, because if there's no movement, the renko won't change. It'll stay on that brick for hours. I've entered a trade, 4 hours later I got 5 pips, you know, and that's an absolute ball breaker. He wants to spend 4 hours for $30, so you know, do be aware of that one. The most volatile times of the market are your friend. Volatility is a very, very important when it comes to a scalper. So next trade will be for me right here. And this would have been a scary one. We would have almost gotten stopped out, and that would have depended on our spread, because it's moved 5, 10 pips against us plus the spread, so we're getting pretty close to getting stopped out there. But touch wood, it didn't. This went ahead and we made some profits. The only other problem is sometimes when the market runs like this and I close my position in 10 to 15 pips, we can move some of these bigger moves. Lunch Greek. Lunch break. Yes, it is. It is a real problem. So then I would have entered again here, and I don't mind doubling up in a position and then gone through. Now guys, you'll see here, like I said, I don't mind doubling up in a position. And that's because my risk, my unit when I'm scalping is between 0.25% to 0.5%. And I know some professional traders that only risk 0.1%. Dennis, take it easy, buddy, and you're more than welcome to them. You just buzz me anytime. So because I'm using such a low risk, I have no problem doubling up in a position. So do be aware of that. Now, in back testing, things always look really, really good. So take everything we say with a grain of salt. Now, this position here would be a little bit iffy to trade back into again, and I wouldn't have taken this trade here. I would have actually stayed out. And as the market starts to turn, you know, we start going in. I would have actually missed these first few candles because it wasn't quite green. The US has gone into lunch, and because we're in lunch, this area here would be choppy, and then we'd start trading outside of lunch. But I would actually be asleep during this time, so I wouldn't have actually traded that. And then I stay out of trading through Asia, And then as we get out of Asia, I start trading again. So we come back in, we trade that one. Excuse me. Trade that position. Would have got 5 pips and then stopped out. And then would have traded that position and gotten our 5 pips. And then we had a big push down. So it's fairly straightforward. It's nothing too nasty or anything along those lines. And what I try to do is I do try to take every signal, just that with a move I don't take more than 2 to 3 consecutively, and I'll only really take a third if I'm really confident of the market direction, guys. So when I'm actually scalping, I've actually got my 15-minute chart up, and what it'll be doing for me is I'll be following it. And as I'm watching the renko, I'm using the 15-minute as an anchor. And if I see there's a swing failure coming up and the market's changing, and I've got a trade where I'm looking at, a 50 pip target, then I don't mind taking a second or a third position. If we're in level 3 chop and the market's been pretty chaotic, then I don't. So there is a possibility of making this an EA or something similar, but it's a fairly straightforward strategy, and that's all it is. All I'm looking is for a break out of that channel. And I've adapted this from what Todd done in the old YTR room when he had his little channel and had his 15-minute and 30-minute anchor charts. And then I'll just go through. And I'm only really taking the first 1 or 2 trades as the trend changes with the MACD and sitting back and waiting. Doesn't give you the most trades like some other scalping methods do. For example, I'd love to get Dan to come and talk about a system she's doing where she's taking some ridiculous number of trades, I think she wrote, jumping in and out really quick. Yeah, so I've got 3 monitors up. So I've got this monitor here. On my other monitor I've got my 15-minute chart, which I cycle with the hourly charts up and have a look at those as well. And on the third monitor I have my scalp and anything else that I'm doing at the same time. My Skype and my Internet Explorer and everything else running as well. I only run 2 MT4 platforms. So 2 monitors is all you really need, but it was just nice to have the third monitor there, and Newton was over visiting one day and I got him to actually install the third one up as well. So, and usually what I'd have is my 6 pairs. I sometimes have all 9 pairs up. But what I tend to do is I find a pair that I think is most likely to move and I'll trade that. So here we've got the euro dollar. Now it's had a bit of a push up. If this closes down red, retrace and comes back out again with a red MACD, I would start preparing for this. On the 15-minute chart it looks like a swing failure. We've had a pin high. It's just that the euro and the pound have had such a move down that I'm expecting a small retrace. So, and being Friday, I'm not going to trade. Any questions on those, guys? It's fairly straightforward. It's not a complicated strategy. All I'm doing is basically waiting for a candle to close above and out of the channel in line with the MACD. And the clearer it is, the better it is for me. So this here would be a perfect entry just there and going through. And I'm not risking much. I use this as an adjunct or as a bonus to my swing trades or my swing failure trades. So this will be up and running. My swing failure trades are up and running. I'm analysing the markets. But if there's no swing failure trade, I don't mind going in and having 2, 3 or 4 little scalps. I'm up 0.5% for the day. And if that's all I take away for the day, then it's 0.5% I didn't have before. If a swing failure trade eventuates and the market starts moving, then I compound my return by scalping in the same direction as my swing failure. And what that does is it increases my rate of return. It's nice to sit back and get a 2, 3, 4 or 5% day. Now this week on my live account, before I closed them all, it was a 5% week. It's been a really, really choppy week. And touch wood, the scalps have actually accounted for a majority of that. Right? So when the levels aren't clear and I can't see which way things are moving, I'll have the renko charts up, I'll have my scalp chart up, and I'll work towards it. And like I said, by no means is this the only scalping method, this is just what I use. Aid had a lovely scalping method with his range chart where he had a 5 pip range chart and he took a break of the ATR in the direction of a 513 cross. And that works really, really well, especially in ranging markets, and you can actually start picking highs and lows. And that's also a methodology. And it goes back to our old YTR stuff. Any comments, guys, or anything you want to ask, or anyone would like to say anything or discuss? Cool. Before I discovered the renko charts, I used to actually scalp off a 5-minute chart. And the 5-minute chart, I had nothing on it except for a HMA. And basically, I would anchor my 5-minute chart with a 15-minute chart. And if the HMA on the 15-minute chart showed a certain direction, just got kicked out. That's right, Joan, you're welcome back in as long as you got a hall pass. If the HMA on the 15-minute chart was bullish and then my 5-minute chart turned bullish, I would then go bullish. And that was actually the basis. So let me bring that up. Euro, 15. And we'll minimize all these other ones. So 5-minute, 15-minute. Let me get rid of these indicators, guys. Because I used to enjoy using this one as well. Now hopefully I've got a HMA through here. So do you trade every divergence you spotted, or do you have a rule? And I take the first couple of trades on the renko chart. I take the first couple, 2 to 3 maximum. If there's a bigger run and it starts to show more entries, I don't take those consecutive entries because I start to get paranoid that we're running out of momentum. I look at my MACD and that signal line to give me that momentum. So when we go back up, well, wrong one. So let me show you, Princess. So the yellow line gives me my direction, and the green-red line that changes color gives me my momentum. So the momentum's down and up and down and up. So I look at this and try to get divergence of it. So for example, there's divergence there, although that price is fairly almost horizontal. So I'm starting to set up for a bear trend. So when a bearish trend, so when I see that break through, then I'm more likely to take it and hold it longer. So I do use divergence of it and get market information that way. But when I'm actually scalping the break of the channel, I only take the first couple. If I get a trend where it's broken several times out of it, I'll only take the first few because I don't know how soon it's going to run out of momentum. And what you've got to remember is we're only taking bites of 5 to 20 pips max out of the market, and our stop can be 15 to 20 pips. So one stop and it's blown 4 trades. So I tend to be a lot more conservative and have a much higher risk ratio. So let me bring up, this is the last week and a half's renko trades. So 32 trades, which for a scalper for a week's work is pretty low. My highest in a day was 230 trades, but that was like a 25-hour period, which I would never recommend to anyone. But 32 trades, and it's an 8.7% return on the account. So But out of those 32, there was 4 losers. And if you can recognize your losers and cut them short, it really changes that risk reward. The biggest problem you've got with scalping is your risk reward. Because if you let it go for too long, it can really, really hurt you. Whereas if you can be patient and time your entry with the way the market's moving, and this is where it comes back to that analogy of surfing, if you can find the way that the current's moving and just jump on and take bite size out of it, you can be in and out really, really quick. And that's how I use it. So I use my momentum to get me into trades fairly quickly. But this was a 21 period moving average, and then on the 5 minute, I used to play with this moving average a fair bit. I think I had a 13. That looks horrible. You're welcome, Mark. If I used to put a moving average on, and you notice here that it's going red, blue, really quick, and that's actually too quick, so then I'd actually change that out again, and that gives me a much better swing. On renko, sorry JJ, can you just retype that question in for me again? So the trades I showed up were on the renko. I haven't used this method. Good divergence. Which pair, JJ? Trying to get the right chart. Last chart, this chart here with the euro. So current price action. Okay, well, do you think we've got divergence on this? So if we look at that, that's actually sloping up. And our slope is still up from the very low. Oh yes, of course, sorry. I was looking at price as it was. So we've got peak low to peak low, peak low to peak high. So JJ, very, very well spotted. That's the one. Yeah, that's a classic divergence. Now, even though we've got this divergence here, we've got to be careful with hindsight. Hindsight always gives us, 20/20 vision, because, let me grab my little pen. There's our peak low, which corresponds, and JJ spotted the divergence down here. But we've also had divergence here, and that one doesn't really count because it didn't break the low. So we've had 2 divergences. So if you're trading pure divergence off this trade and didn't wait for a confirmation or a breakout of the channel, your first entry would have been here and you would have taken a stop. And then we would have had a second re-entry back here, which would have been positive. Exactly, JJ. That's exactly how I would do it. I would actually wait for my MACD momentum to give me a bullish signal, and then, a break of the channel in direction with that bullish signal. That's how we would trade it. Well, that's how I would trade it. But, when you start to see this happen, because we've already taken, let me get rid of those lines, and I'll get rid of that one. If we look at this, no entry there, no entry there. We've taken a possible entry on this one, but there's divergence setting up. So if you were going to scalp this and you're seeing divergence, all right, if we entered here, it actually worked out for us. And it is during Asia, that's right, which I wouldn't be trading. But if we were trading it, you could definitely take it and it might have worked. But because there's divergence coming up, we can actually see that our momentum is actually dying. Not only is it dying because we're in Asia or whatnot, but we can see that our MACD is getting more and more bullish, even though price is still giving us a bearish signal. So, and this is the hardest part, and this is a cool discussion I had with Phil, is, we can write down rules of you're going to trade and completely make something completely mechanical, but it doesn't always work that way, because even though I have a mechanical scalping system, in the back of my mind I'm still correlating it with my 15-minute chart and seeing how price is moving and whether there's news coming out and a myriad of other factors which you don't always put down. So how should I explain it? It's easy to say, look, you take a trade on this position and someone will take a trade and it won't work, and I'll come back and say, well, you didn't take this into account or that into account. And this is why it's important that you try to make a system your own, because our experiences with it and the amount of times we use it tends to colour it. And scalping is so discretionary, it's not as straightforward as it seems. First retrace, HMA has changed. So are you talking the HMAs that we had, oops, up here? So guys, this is my 5-minute chart on the left, and this is my 15-minute chart. So after divergence back on the renko, did you have a HMA on it? Because JJ, the channel isn't actually a HMA, it's a smooth moving average. Not really, Zoran. I'll start up my done the same thing though. Yeah, just give us a sec. And here we go. Alright, so this is some of the trades, or better yet, let me get rid of that one. Let me call up the trades themselves. Here we go. That doesn't show you pips as much though. So to answer your question is I am aware of Friday being more difficult. So what I'll do is I'll take a smaller position size. Doesn't mean that I don't trade. I just trade a lot more conservatively and I'm much more stricter about my rules. So Mondays and Fridays, which we can have the all that difficulty, can be a problem. The Friday trap is where the market makers or the smart money or whatever you want to call them tends to push the price in one direction and then snap it back and trap us. And for example, we've been having a fairly bullish trend and everyone starts to buy long. Then all of a sudden, come the end of the session, they snap it back low and they trap you in your long position. And then you're caught paying spread and everything else over the weekend or getting stopped out. So Mondays and Fridays is where we see a lot more manipulation of the market until the market gets into the rhythm. So a lot of the Steve Morrow's group or Day Trading Live and James, and just guys, James is having a webinar I think this Sunday, and I'll grab the details and post it for everyone. These sort of guys watch the Mondays and Fridays. Aid had a nice little rule that he didn't trade Fridays because of the trap and the volatility and everything else that tends to happen. A lot of the traders themselves go away, so we don't always have a lot of momentum or drive in the market. So do be cautious on those days. They can turn around and bite you. Yes. James Wrenching. So guys, that's my renko chart, and this was basically my HMA chart, and I would trade looking at the 15-minute down here. We are actually in a bullish trend, an uptrend, and when it was, every time the HMA chain I would jump on, as soon as that changed and hold that position until I got 5 pips. And then when it changed here again, jumped on and held until I got 5 pips again. And it changed here again, jumped on the following candle and waited until I got 5 pips. And that's how I used to trade. And that was the pseudo scalp. There was also a 30-minute anchor chart with the pressure zone, but I used to use a MACD on it as well. Thank you, Sam. James is holding his meeting, and like I said, I like that swing failure trading strategy, so I'm going to sit up and watch it. So 7:30 Brisbane. Sam, do you know if that's AM or PM? Obviously it'll be PM. On my minute charts, this is a HMA. PM. Thank you, Sam. So, and this wasn't too bad. The problem is with this sometimes I had much bigger stops. So I actually, in the end, gravitated away from using those charts and started trading renkos. I found that my stops were a little bit tighter and I could see price action and I could see consolidation developing and start to draw it up, say look for a Willy box breakout through there and trade it, look for a swing failure high and then trade it, and then start counting my levels and pushes. So 1 push, 2 push, 3 pushes, and then we've got a swing failure going along. Aid, have a lovely weekend, buddy. Nice to chat with you. You have a great weekend, and all my love to your family too. Guys, any other questions? Bye, Aid. And guys, I've just turned on the sharing. I didn't realize it. So if you've got a microphone and you want to ask a question, just ask away. Although I've just turned my mic off on the other computer. So, and that's how I scalp. So on the one chart, I'll have my 15-minute on the one platform, my 15-minute chart or hour chart, whichever chart I'm looking at, and look at my swing failure, and then I'll add to it through my scalping. And this isn't the only scalping methodology out there. There's a myriad of them out there. You've just got to find something that suits you. An experiment. Start off with a demo account and then work your way up. Phil has one of the best systems I've ever seen for testing something. He tries it in demo. When he reaches a certain target, he then goes to micros. When he reaches a certain target, he then goes to minis, and he builds it up. And what he's doing is he's getting to learn his trading system and actually, in his own mind, proving that it works for himself. And I think that's really, really good. Something along those lines is really important to do. But, like I said, with scalping, because of the high level of concentration and because price action happens so quick, you've got to really concentrate and focus on it, and that becomes fairly labor intensive. And for some of the small position sizes, some people find that very difficult. But it can be fairly rewarding. Like I said, my best day was, I have to think back now, so long ago, was 22% return in one day. And I keep asking Phil to do a presentation, but Phil likes listening and sending me messages. And Phil's always welcome. It would be good. So, 22% return in a day is actually pretty decent. G'day, Phil. In fact, I remember having chat on a demo account with Phil and returning like a 17% day, which is also fantastic. But this isn't the end-all or be-all. Look at scalping, in my opinion, as an adjunct, as just an extra tool in your little arsenal, which you can then apply and do stuff. So, Angela, do I use the trade box? I do sometimes, depending on which chart. The problem with the trade box is it's set up on one live account, and I haven't set it up on this one yet. I was going to try to use the MT4 Pro Trader and have that on and running, but for some reason I can't get it running, which is giving me the errors. And I bet you if I try to set it up now, it's going to work because you guys are watching. What's my code? I can't remember it. That's right, because I saved it. Okay, and just because you guys are watching, it now works. So with my one click, I'll sit here and I'd enter a trade or exit a trade. And you can see I've already got this set up. Stop loss of 20, which I can manipulate, add or up or down. I have a tentative target of 40 pips, but I'm really aiming for, there's my break even at 10, and then I just hit my close all button when I hit a zone that I like. Yeah, PMP, I've just gotten so used to it. I use it like, because it's a fib cluster, it incorporates my pivots and everything else. So price tends to respect the PMP lines. So you tend to find a lot of resistance or support. So you can see, if we look at today, where the market opened, we've got, the renko's hit it 3 times, and it wasn't until the 4th push that we got a break. And it's come up, in this case it's come up just underneath the ADR. So usually what I find is that if I get a break of a PMP, the ensuing PMP is actually a good target, as long as it meets. So the PMPs I use not so much with my scalping strategy, I use that more with my swing failure strategy and longer time frame strategies. And I'll aim for PMP targets. I use them as take profits and moving my stops. What is called these lines? These are called a price. They're called a PMP line, and it's a paid indicator. You buy it from Price Master Pro. And I got to apologise because I promised a gent I wouldn't keep plugging it, but I do enjoy it. But it's just a line on a chart. It's a fib cluster. Yep, the wick would have hit grey, or with the spread as well, I think it would have hit the ADR. It would have manipulated as such. That's what I'd be expecting. Pound yen's doing a double top at the moment. Oh, the box for taking trades, Jane. This is called Price Master Pro. Let's see if I can find it up here for you. Sorry, MT4 Pro Trader. Please excuse me. So there it is, MT4 Pro Trader. This is Aid's one-click system that Aid used to have in his room, and it's quite simple because it's actually a nice little system. What it is basically is a buy button and a sell button. You have to buy it, and can you trail on it? Jane, this MT4 Pro Trader lets you do nearly anything. If you can program it, it'll let you trade your system. For example, you've got a whole little panel here that you can set up to give you different price action, and I've got no idea how that works because I've never gotten into it. And if we look at, not to be a plug because it's supposed to be a scalping thing, but if we go through, you can go through your trade settings, so you can set your lot size, your take profit, stop loss, your trailing stop, when you want to break even, maximum spread, how you want your break even to step, what sort of slippage. If you're only going to let yourself trade 1 position or 50 positions, you can stipulate it so it doesn't let you do it. It doesn't let me take a trade more than 1 minute, so if I get a fail, if I take a trade, it won't let me double up straight away. I'll have to wait a minute before I can take it. It can actually trade for you, and it can reverse, it can hedge for you, it can add to your winning positions if you're doing well. You can actually trade it, go right through your money management and what you want to risk. You can put an auto stop. It'll calculate, for example, if I took say I took a short at this position, it would calculate the last high plus whatever pips you stipulate, and then, for example, say I had a 1% risk, it would automatically calculate your lot size and put your lot size on, which I think is really cool. Different sort of trailings depending on how you want to trail, and if you wanted to program its martingale mode, if you wanted martingale, offline charts, and then if you wanted to customize a strategy and customize it and have it trading for you, it'll do that as well. You can set 1,000,001 things on it and design your own trade. and I have absolutely no idea how to use all these functions. All I do is I bought it so I can hit buy and I can hit sell and hit break even. That's all I use. But as you can see, there's more things to fill in there than a, than a whatever else there is. Lots of things to fill in, and it goes and goes and goes. So it's actually a pretty nifty little indicator. I like this because this is much easier to use because it's a simple buy and a simple sell. The hard thing with this is changing your position. TradeBox, the other indicator, is really, really cool because it lets you manipulate and do some of the same sort of functions, but you can set your stops and you can set your profit targets with lines, and you can then change them if you want to. Not that I recommend that you change your take profit or whatnot. So, it's pretty good that way. The bad thing with the trade box is it's not a click. You've got to actually select the icon and drag it across, which makes it a little bit clumsy to use sometimes. That's the problem with TradeBox. The way I really use TradeBox is for when I am actually backtesting. Yeah, you notice that too, Jane. TradeBox for me is a fantastic way to backtest. And all my backtesting and practicing that I do is all done off a TradeBox EA. So that's the difference. This here, for example, if we wanted to take a short here, I just hit the sell button, short position's on. The growling noise you would have heard is the bears, so because we sold. And you can see we're down $28. As soon as we hit, we can set our break even to 5 pips or 4. We'll set it to 5 pips. And I'll let this run and you can see how it works. And not that this would be a real scalp for me, this is actually not a setup at all. And then if I wanted to close everything, now you've got to be careful with this one. When you hit close all, it literally closes every trade that's running. You can't close individual trades. But if we wanted to take a long, we took a long, and you can hear the cows or bulls mooing away. And then if we wanted to close everything, because there were losses, it flushed down the toilet. So, and that actually comes with the indicator. I didn't make that up at all. Now guys, in all seriousness, is there any other scalping questions? Because if there isn't, I'll actually stop the recording and whatnot, and then we can just chat away if you like. So just bear with me, I'll stop. Any questions?